is Justin Pulitzer. This is my midweek video for Wednesday, March 29th, 2023. A few more days till the end of the quarter. Bit of a push me, pull you market. We have lock in versus markup, and we saw some rotation out of tech. And of course, when we see rotation out of tech, it goes back into the oils and such. And we're seeing a little bit of relief in the banks, but will that last? That is the to be determined. I know everyone's all excited about April, but April's a little funny because people sometimes sell stocks, particularly ones with big gains, to pay the tax ban. I believe that's April 18th. Yeah, I know there's allocation money to 401ks and such, and that'll probably largely go into the ETFs, the SPY, the Qs, and so on and so forth, but we'll have to see how that plays out. I am also a little worried about a potential sell in May and go away, particularly if we are up into that. If we're weak, it's a little less certain, but if we are up, it is got the potential to mark a high water mark for a while. I was looking at the Max Pain pin again, and it's oddly enough right there at 395 again, second week in a row. That would be something. Screw all the put and call buyers. The market makers win again, I suppose. Sentiment going into this week, this had been down in the 30s, 35 actually, and it rebounded pretty nicely as we added on, I guess, the last 50 or 60, 70 people. So still underwater, but roughly evenly matched. As far as the CNN gauge goes, they're 38, down from a week ago at 42. A month ago, they were at 61. Remember, we were saying, I don't know what these people are smoking, but still a little healthy fear there. As far as the week that is, we have the GDP. I think it's about be about 2.7. Let's take a quick look. Come on. I know you can do it. Load them up. Yep, 2.7. And we'll see how that is. And then, of course, the Fed's number of choice, the personal income and outlays, of course, they look at PCE, and we know this because Powell has told us. Here they're looking at 0.4, so theoretically lower than the prior read. We'll see. If this number comes in hot, could be a little problematic for the bulls. Now, something I noted, the probability of May being no hike has been steadily increasing at the current level, 63. June is also now, we're not going anywhere. Here's where things changed a little bit today. July, we had been pricing in a rate cut, and now it's looking like they're going to stand pat. Because look, we were at 50% a day ago, and now we're down to 35. Now, I want to just caution you. There's an index you could look at. It's called the MOVE index, and it's basically the VIX for bonds. It's pretty freaking wild. I mean, it was trading like the equivalent of a VIX of like 50. And these numbers can really whip around. Just saying. For this to move this large in bond land is like, I mean, it's like you're trading a IPO or a biotech. And these are treasuries. Fed is out over its skis, in my opinion, here. Anyway, the treasuries now, again, the 2-year is firmed up over 4.4, let's just say anything over 4%. And the 10-year is starting to firm up a little bit too. The stock bulls, particularly the ones in tech, need this down. At least stable to down, because, of course, PE multiple premium expansion happens when you have lower interest rates. So this probably will be a little bit of a govna on the markets. Now, VIX, not a care in the world, right? We're just slowly bleeding off. I have an alert set here at 1912. I'll start doing some things once we get down there, or up over the Tuesday higher at 2141. I already have some put ratio plays on. I told you 390, 375, 350, or if you want to go down to, or if you could also do 395, 375, 350, or 345. I mean, you could play around with those numbers, but it's basically buying a strike that's kind of close to where we are now and selling both the December and October lows as your short strikes as key support. And we'll have to see how things play out with earnings. Don't get too big with VIX down this low. Usually you want to get a little bigger when the VIX is up over 30 or closer to 36. But, you know, if you size it right and you put it on small, it's okay. The problem is, of course, if things go against you, you have both your delta, your gamma, which is, of course, the first derivative for rate of change, and more importantly, which everyone seems to forget, vega going against you. And if you have price going against you and volatility going against you, you're pretty much effed. So if we get down between this 1845 and I'm going to start operations down near 1912, I'll probably start adding to the short side of the things. Maybe I'll sell some call spreads, or maybe I'll just outright do the puts. But it has been support recently, and I suspect it will remain so for a while. The TLT. So we're kind of between levels here. We held the 20 MA, even though we broke the 50 MA. We're kind of still holding this gap that we had from 310. We chested it again on 314, but we seem to struggle staying above the 200 MA, but then we seem to be holding roughly around the 50 and 20 MA. 100 MA was also prior resistance, so that may act as support, but a lower TLT, think, is not so great for NASDAQ. A higher TLT is good for NASDAQ as long as it's not going up too hard, too fast, because that will get the recessionistas in a tizzy. Eventually, yeah, that'll be great for P multiple premiums, but it sometimes initially is not. TNX, we had a look below and fail, and I don't want to freak anyone the F out, but could we get back up to 38.79 to 39.05? It's entirely possible. Look at this wave here. Other than this little bit up here, if you lop that off, it just looks like we're kind of in a wave pattern going between, you know, 34s, 33s, and 38s, 39s. That being said, anything that remains over the 200 MA is not our friend, meaning bulls. You've got to get back below 35, and more importantly, 34.83, and then, of course, 34.02 would be hunky-dory for the longs. First range of resistance is between the 50 MA up here at 36.65 and 37.03. We have a 20 MA and a 100 MA in between there. So this confluence looks to me like it could be a magnet as long as we stay above the 200 MA, but may also act as resistance now because we are coming down. Okay. Bulls in general need that to be lower. KRE starting to find some support here. A bit of a look below and fail, but not all that impressive. If you want to nibble a little down here, I don't mind. It's got some decent, yield and qualities, but I'd be a little more excited down closer to 32s if we could get down there, like another little leg. That market will not like that, by the way, but if that does take place, I would be very interested in it if we do continue to rally. I know for some of you day traders and scalp traders, wherever the 20 MA is initially, I think is a right or right out short, 49.56 and falling. XLF. I keep hearing people wanting to buy the banks, and I guess I understand why. 30.33 to 31.38 has been key support. This is now the third time. Very simple. If you want to be long the banks, 31.22 was the Tuesday low of day, and good stop. Anything above there, I think you could be long. Maybe even for the retest of 32.87 or wherever the 20 MA is at the time, because that was the resistance up here on 3.6. So you could see here we were starting to make new lows, and the money flow wasn't confirming. That's a very good sign, actually, and this could be, I guess, your morning star or your island reversal. We've seen this a few times with the banks. It's taken some sweet time, but I don't mind. If you want to do some kind of a call spread here, defined risk trades, I'm cool with that. 35 would probably be, or 34 would be my upper strike if you want to be more conservative, 33s to 34s. So basically like buy at the money, 31, and maybe sell 34, 35. Not in the same week, though. Make sure it's, 30 to 50 days out. That's usually my preference. Gold. So we ran into a little resistance at the 78.6. We are currently holding the 10 MA, and I don't really see gold getting itself into too much trouble here unless, and it is very possible, we start losing, number one, 182.12, which was the Tuesday low. And anything below 181.73 to me would look not so good, because we've seen now multiple tests below, and from a bit of a lower high would not be so great. The 20 MA was really where the gong show got started, so that should theoretically be some support because this was roughly where this broke out kind of from. And we'd see. But yeah, I'm largely out of my gold trade, but check this Newmont mining out. I had gotten out, remember, back here at the 38.2 and also the 50, 100, 200 MA confluence. The pullback was very minor, and it held the 100 MA very well, and now we're back up over the 200 MA and re-challenging for the third time. So, if you want to try Newmont mining long, which I would be cool with, 47.87, which was the Tuesday low of day. If you want to give it a little more room, 47.77, which is the 50 MA, or the 47.76. Let's use that because it's the 200 MA right below there. Anything below there to me is a stop or maybe even a short. But if we do get up over 48.71, which is the 38.2, I think we're going right up here to 50.88, which is the 50% fib, and also this big reversal candle low down at 51.12. So between 51.12 and 50.88, they could have a little bit of a bounce play there. I was looking at Dr. Copper, the other kind of metal, and it's sort of a little unclear to me where we are in the cycle with this, but we've clearly broken the downtrend, the uptrend, and we stalled at the backside of the old up channel. So if this is going to roll over here and we are transitioning from bullish to bearish, which it seems we are, this could be problematic here. And if we lose the 20 MA, if we stall here at the 50, number one, we should come back to the 20 MA. But if that fails, could we wind up down somewhere around $3.74, roughly where the 200 MA meets with primary trend? It's very possible. And look where those lows intersect with, back where these 1.5, 1.4 kind of low area. Just something to consider. That being said, if you're short, don't let it get back up over the 50 MA on you now. It's 4.0715. If it does get over there, you could even be long. But not really entirely showing its hand yet, but does look a little iffy to my eye. Bitcoin, the pullback has been kind of gentle. This was our area to kind of book the gains into, and we are pulling back. So the prior big breakout zone was 24,450 to 25,270, let's say. Maybe 25,350. Let me draw this in for you guys. This area here could act as support on a pullback. And I like that the 20 MA and 50 MA are both going to be in that striking zone. So if we do pull back into there, that's probably an area to maybe buy the dip, at least right or right out. We know the 100 MA here was key. Whenever you see these circles bright white like this, you know I draw them in on the mobile app. I don't know why. I've asked them for years to switch this back, but it is what it is. The 100 MA is the bigger, more key support, but for shorter term, probably enough interested parties in that area. Coinbase, I told you to get out on a break of 79, and if you listened, you did fine. And we are just kind of trying to rally, but listing lowers. They got a Wells notice, so they're being investigated. The 100 MA and the 61.8 was key support. If we have another little leg lower, I've been thinking about putting on some kind of put ratio. I'd probably do it a little... well, number one, if you want to do it here playing for lower, you could buy one of these and then sell 2 times out. Or if it does come down, you could actually sell one of these and then buy one out. You don't necessarily have to buy 2, but you could buy 1 out. You could just do a bull put spread. So shorting the upper strike and buying the lower strike as your kind of cutoff. If you've got the stones for it, you could just sell outright short puts, but do realize you will own it at that price. And let's say your short put is 45 and the stock goes to 0, you own it at 45 unless you take it off. So just keep that in mind. Also, for depending on your account size and margin and stuff, these are things to factor in. But looks to me like we're in a bit of a chop zone. And if crypto goes lower, Coinbase will go lower. It is basically a crypto proxy. Whether that's right or wrong, it just is what it is, and traders trade. Oil, oh my gosh, we talked about covering at pretty much the dead low on Friday, and look at this run. Woo! So a few things to note. One, we're back over the 20 MA, and number two, we're back over 72 quarter. Anything below 72 quarter is a short. As you can see, I have a short back below 72 quarter. Now, where will the real resistance come in? Well, several times it has come in at the 100 MA. And by the way, if you're long XLE or any of those oil names, you better be watching the 100 MA here, because when it gets up there, you need to sell those stocks, because oil, if it pulls back, will take your stocks lower. And traders do what works until it doesn't, and JP will do what works until it doesn't. So currently 77.68 and falling. But, we'll see how far this has to go. We have a bit of a higher low now, and, some pretty convincing bottoming tails with excess. So do keep that in mind. As far as the aforementioned XLE goes, we talked about this being on the lows, the channel lows, and 20 MA has been some resistance, so I would be trimming out some here at 81s, 81.09 if you could get it, 81.54 if you can get it anywhere in this zone. Will we get all the way back to 82.75 to 83 or 85.38, which is the 50 MA? I don't know. This is where it really broke down from and where we failed. It's possible we do get back up to 82s, but I do like trimming out at the 20 MA and then this 200 MA zone up. So 82.28 to 82.79. I think that's where this will meet some rough rider resistance. You can see this was key support. It broke. We could check back, but I would be a seller into that area. As far as AXON goes, it held the 200 MA kind of boss status, but we are into the 20 MA and downtrend resistance, so probably a good area to trim profits into. Could it get back up to the 100 MA, 50 MA? It's possible, but it's got to stay over the 20 MA. I would like to trim here, and I think if you want to use 107 as a VWAP, basically the VWAP as a stop, I'm cool with that too. Keep in mind, we're kind of in a downtrend. I realize we have a bounce leg within a downtrend, but we are still in a downtrend here. Will the downtrend break? It's possible, but let's assume it doesn't until it does. You know what I mean? So Chevron, we're right on 20 MA resistance here and backside of old uptrend, so probably a good area to trim a little out into. If we get up to the 200 MA, that would probably be a short at 164s. Maybe it gets all the way back up to 167s. That would be a very nice short, but here's the question, and I don't know that this is the case. Are we forming a little inverted head and shoulders? So that would mean we do come up, fail, come down again, and then could go. It's too close to the highs for me to really feel comfortable with that logic, but I am cognizant that we did hit the money flow lows and we are getting a bounce, and as long as interest rates are rising and as long as tech is going lower, this will continue to have a bit of a bounce. As soon as that dynamic changes and tech starts rallying, this stuff will all get creamed again. So Warren Buffett, being the craven buyer that he is, we do have a potential trend break here. So just keep it simple. Must clear and hold above the 50 MA. So we are above it, but now it's got to hold. By the way, if you bought down here, I would trim out a little at 62.31. This was a very key level that we failed at to basically and broke down from. Where would be my stop now? VWAP is 61.72. So I would probably use anything below 61.5 as a stop now. And if we do keep going, obviously the 100 MA, 200 MA, the 100 MA has been the key resistance, so 64.39 and dropping. Let's take a look at, let's go into ES and NQ. I'll pull up SPY first. This chart just gets messier and messier and messier. Don't worry, we'll get through it. By the way, Look at this boss hold of the top side of this neutral zone. Something to consider. All right, so let's discuss. ES, number one thing to note. We got below some key support here, and I had told you the bulls need to hold 4,000 quarter to 39.97 half. We lost it. We checked back. A little bit of a pullback, and then once we cleared it, it was off to the races because I'm not the only guy who sees this stuff. So where could we go now? Well, 40.2375, 40.2775, 40.34 quarter. If we do get back below 39.97 half and hold, you probably don't want to be long. I'll just leave it at that. The next big downside targets, by the way, if that were to be the case, we'd kind of have a bit of a poor low here, one tick of excess, so this is a very weak low. I don't necessarily think it would hold, so 39.8075. Then you're looking at really 39.6775, 39.6075, which is the 2 times range of this consolidation. And then the big 2.618 of that consolidation is 39.38. So those are big downside targets if we do fail here. I'll just say this, though. The bears kind of did fail. I mean, they didn't kind of fail. They did fail. And we are up above the downtrend. So if there were a pullback early morning, check this out, the backside of the old down channel, like let's say we opened down at 39.95 to 39.97 half, it's a buy, right? Because this was just a check back to the breakout, and it's the backside of the channel. So theoretically, if the market's going to remain bullish, let's say we kind of like do one of these, we could do one of these, like we pull back and then go. So keep that in mind. This area, if it doesn't hold, the market's got problems. If it does hold, I think we could continue to extend higher. The Qs. Oh, yes. Let's talk about those Qs. Remember the double bottom we talked about here, roughly 12,035.75? Well, we did breach it today, and we did get down to that 12,678 we talked about, but we got back up over there. So very, very simple here. Anything back below 12,735.75 is again a short, and anything that breaks 12,678 again now is a short, again, an add to the short. No real excess on the lows. Those probably would get challenged, and the channel low is much, much lower. I don't know if we're going to do it all at once, but 12,387.5 would be the channel low if it happened on the open. Now, we do have resistance coming in. Really, I don't know how the thing got going with that, but anyway. The 200 MA 15-minute lines up very nicely with the downtrend, and here's the key. The bulls on the open need to get over 12,789, and really this 12,811 quarter. This was a very key spot. If the bulls can clear that, the next big resistance comes in at this little mini downtrend, which I don't really see as being all that significant, but 12,848.75, which was this little mini breakdown level. Let's make that orange. We like to do that once in a while when they're key. You can see that area. So this could be some resistance right here, and you can see there's the intersection of that downtrend and the horizontal level. So right now, bulls are kind of back to where it broke down from the prior day, but the real must hold to me is these double bottoms. Now that this was sort of a weak low or poor low, and it was repaired, this is also kind of weakish lows. Doesn't mean they, I don't see this as having to be repaired. I mean, there's enough ticks of excess here, but I wouldn't say they're poor, but they're weak. Okay, so that means if they do get checked back, I don't think that they would hold. So yep, those are those levels. So let's discuss the SPY. My lord, what do we have here? It just looks like a freaking mess, right? But we are in a messy tape, so is there anything I could do to make... Let's get rid of this here, and let's get rid of... I'm trying to think what else I could really get rid of here, but there's really not all that much more. Maybe this little gap fill because we filled it already. So let's zoom in here. I think if we zoom in, it'll look very clear to you where we are, because it's very clear to me. So we checked back to the top side of this neutral zone, which is 393.70 down to, of course, 391.49. With the 200 MA in there, you have a 10 MA right here, a 20 MA, and a 100 MA. I think if we get over the high of day from Tuesday, it's very obvious to me where we're going. We're going back up to the 50 MA at 400. I mean, that seems as clear as day to me. Anything above 395, you know I'm more bullish than bearish. Anything below 395, I'm a little, more bearish short term, but the pin for the Friday is still 395, like I said, and it would not surprise me to just see a ton of frickin' chop only to wind back up in this very same place by Friday. We'll see if it shifts. If it does, you will be the second to know, because obviously I would be the first to know, and then I'll report it to you, and because I'm number one, then you guys will be the second to know. So very simple. I do believe 399.48 up to the 50 MA at wherever it is at the time, 442 or 423, maybe overshoot to 402s, will be resistance. We did fail below the Fed day low. We have a lower high, so technically one time framing. Ended the one time framing here on Monday. Resumed it on Tuesday, because it's a lower high, but what do we know about one time framing? It can only end for one period. So anything over, oh yes, we're doing real technical kung fu here for you guys, don't worry. You're in here with the best. Anything over the Tuesday high, and I believe we're over it in the overnight right now. Yep, we sure are. Anything that remains over there is a long for the move back up to 400, I believe, which I do think you gotta trim out of. Anything back inside of the Tuesday range that is below the Tuesday high does get a little bit more problematic. I'm not gonna lie to you. And if we do start slipping below the 20 MA, you probably don't want to be long. If we can dip below and hold the 20 MA and bounce and we have a higher low, then I think you got a long again with a stop below the 20 MA of 394.71. And again, in general, above 395, we're more bullish than bearish. Below, we're not so bullish and maybe a little more bearish. Expected move, $5.84, which would be very consistent to the move to 400. We'll see if it happens. And then everyone will be super excited. The DIA. All right. You already know what I'm going to say. It's the same thing I said in the weekend video. Bulls need to hold 322.69. If they can't, we're going lower, probably back down to 320. If they can, we could get over the 2-day. By the way, this is a very, very nice little setup here. Over 320. See, what I like about this is a fairly narrow range. And if we did, I'm going to just do it either way. Row long above the high or short below the low. 322.84. So 83. All right, row short. Let's put that in there. So I think you got a nice little 2-day range here, and it's long above or short below. And if we can get over the downtrend, then I think we're ripping up to 329.25 and maybe even the 50 MA, which is probably a short because it was the last time on 3.6. Okay. Expected move here is $4.71. I was looking at 3M, which just continues to make new lows below the COVID crash lows and below the October lows. I mean, what amazes me, and I'm very curious to see how this plays out. I mean, just because, I'm a student of the markets. This has almost a 6% yield, and it's supposedly trading at 9 times earnings. So a couple of things are either going to happen. Number one, either this is too cheap down here, and the stock needs to go much higher, or it's being re-rated because their earnings are about to collapse and the stock's going to go much lower and they're going to cut their dividends soon. I'm sort of betting that might be the case, but we're going to find out very soon on 425. So if they do kind of lower the boom on 425, that will likely be the final washout of the stock. it'll be down big and it'll be real ugly, and everyone on TV will tell you how crappy the company is and the stock. But I think after like a few days of down, once everyone, is out of it, it could wind up being a buy. And I'm even starting to kind of warm up to it here, because look at the money flow. It's starting to bend back higher. Careful if it rallies into the number. Down into it, it depends on how down into it and how steep it is. But I was really kind of hoping for like a gap down play, and then, maybe it's a buy the dip after all the bad news is out and all the downgrades happen. But the 20 MA has been resistance, and if it can clear the 20 MA, it's possible it does squeeze into the earnings. It looks cheap, but looks can sometimes be deceiving in bear markets. Deer. All the people on TV love this stock, and I guess you could love it too, as long as it holds the 200 MA, which it has now held many times like a boss. But if it loses it, they're not going to be doing so well. So I guess it's been in a chop range play. 20 MA is probably a good short, because once it came through there, that was problematic, and this would be a good area if you, by the way, you bought the dip to sell into between 434 to 401.87, or wherever the 20 MA is at the time. If you're currently long, and I know some of you are because you frickin' asked me about it, I'm just joking. The 10 MA 392.59 is a good stop. That's the 10 MA, or if you want to just use low of day of 392.39, that's fine. I'm cool either way. Caterpillar. Also a 200 MA champion. I was really, really, really pissed off it didn't get back down to 196.96, because this is where I wanted to buy the dip, between there and 199.23. Would I buy it now after having held the 200 MA twice? Maybe. That'd probably be where I cover, because if it breaks the 200 MA, it's a short. After kind of a two-time hold. This is the 50% fib, by the way. It held twice. We should, quote-unquote, get back up again to 225.76 like we did the last time. But if we somehow lose the 50% fib in the 200 MA, I think we're coming down to the 61.8 at 200, and maybe even filling in that gap to 196.96. And I am going to put an alert there. 96, and I'm going to say last, at or below, cover short, sell OTM puts, or put spreads or ratios, probably just for a quick bounce play. I'll see where it is at the time. What's up with Boeing? Boeing. All right, so it's back up. We held the 100 MA. It looks like to me, it may have 50 MA resistance here, because it does line up with the trend line, the channel actually, and the backside of the old uptrend. So this is kind of do or die for the old Boeing. Didn't get back down to the 188 area, which I was kind of hoping for. Really was. Really disappointed, Bob. Little Jack Nicholson joker. Anyway. Yeah. Summer of 89. All right, so we're coming into some resistance. Any more strength, I'd be a seller. And you may even want to try a short, right or right out. We will see. IWM. I always liked you, Bob. IWM. $3.58 is the expected move in IWM. Also, nice little 2-day range setup, and it's right on very key. The old all-time high, 5 years ago. Yeah, it's 5 years ago. 173.39, whereas we're basically nowhere in 5 years with this frickin' thing. Doesn't surprise me. We did have a look below and fail here, so if you do want to play along, over the 2-day high could get you a move up to the 20 MA, back up to 178. That would be better than a sharp stick in the eye, right? So over 174, I don't often trade. Those of you who know me, I don't often trade this stock or ETF, but when I do, and this would be one of those instances, I think. If we did get over the 2-day high, I would play for a move to the 20 MA, but if we do lose the 2-day low, you could come down to 170.34, so let's put an alert here. Below 172.36, so 35, and I'll say row. Short. to, what did I say? 170.34. 170.34. Yes, okay. Let me replace this alert to 20 MA. It's just easier. I get a lot of alerts all day. Expected move, $3.58. Stock Qs, because why not? That's what we all only want to talk about is the Qs. So, a few things to note about the Qs. We did have a look above and fail. We actually had two of them on the 22nd and 23rd. We are pulling back. We did have a little bit of a look below and fail of the 322 low of day. Now, technically, that means we could come back up to the higher end of the range. So, if you're long, what's your stop? Well, 305.95. Anything below there is more bearish than bullish. Anything above, I think you could be fine. The ideal scenario, of course, would be a higher low and then take out the 308.20 high, and then you could run. I'm just going to put an alert over this, though. 308.21, and I'll say last row long. For 313.68-ish, but keep an eye on it. It might not get there, you know, but if you miss by a little. Now, if we do lose here, where are we going? Well, 20 MA at 390, and maybe even the 50 MA down at 298.04. Now, I told you before with the SPY where the max pain was, but you know what I didn't tell you about was the Qs. That might be something to consider as well. So as we're talking, just you and I on this little private chat we have, the expected pin is 309. So that would imply a little bit higher. Interesting. It's pretty much 309 all week, though, which is a little odd. Is this loading properly? I'm going to let this sit here. I don't know if it's still loading, but it's showing me 309 at the moment. So anything over 305.95, I'd rather be more long than short, and anything... Oh, see, it just changed. Now it's showing me... This is exactly what I thought it was going to do, actually. So I was a little surprised, the Qs. So the Qs is showing me a max pain down at 300, which is the 20 MA. So if that were the case, we could come down like lower, maybe to like 296.88, and then maybe rebound all the way back up to 300. I'll be curious to keep an eye on this, though, because like, check this out. For the day before, on March 30th, which is Thursday, it's 310. So it's like, seems to me like it might go up and then down, which is odd. Yeah, 309 is on the 29th. Today was the 28th, which was 309 also. But yeah, that's kind of crazy. But by the 31st, I'm seeing 300. So maybe we're going to get a bad PCE number on Friday. I'll let you know if this changes, but as of now, it looks like higher before lower in the Qs. $5.53 is the expected move. That could be like the max like pain lock-in situation. SMH, so Micron reported after hours. It was initially up, I don't know why. 6 times was the charm, and they still had crappy numbers. But when stocks go up on crappy numbers, that's good. Like Walgreens had crappy numbers, and the stock was up. The bottom on that may be in. So SMH, we held 2 key levels, 249.35, which is a very, very key one, and the 20 MA. If we lose the 20 MA, I think we come down to the 50 MA at 243.10, and then ultimately, if there's a lot more downside, we could come back down and test 234.59, which is, of course, the new the old 249.35. I'm basically viewing 249.35 as the new version of the 234.59, which is very key. We are one-time framing to the downside here. So keep an eye on the high of day here, 251.13. So 251.14. By the way, the big plan, just so you know this, if China invades Taiwan, they're going to bomb the semiconductor factories so that the CCP doesn't get them. Yep, that's what they're going to do. Not so that the CCP could take them over and have somewhat seamless transition and allow those chips to supply the world, but they are going to bomb it. Pretty insane. So 20 MA key, 50 MA key, obviously, but keep an eye out for a higher low, and then if we can clear this, we might bounce back up. Speaking of the aforementioned Micron, Moo. This is a crappy company that always gets people get really, really excited at the end of the cycle. So it's up a little. It's not even up anymore. It's like barely up after hours. I think this was up to like 61s. I was talking with a subscriber about this in the after hours. I said don't let it really get over 61.19 on you. We'll see if this gets up and over, but it's got to clear 61, at least this area here, 61.01 at the very least, and hold. If it can, maybe we get back up to 64s. Are we starting to make higher lows? And does that mean we're in a new bull cycle and we're going to go, all the way on up? It's possible, but what was the after? Let's make it very simple here. The after hours high was 61.22. So if we can get over 61.22 and hold, it's a row long. Anything below there to me is chop, and if we have a lower high in the morning, be careful. Opening 5 or 15 minute range, I do think, could be tradable, either up or down, or maybe both even. Yeah. All right. So that's Micron. Let's take a look at something that actually is a good company. NVIDIA, for example, which is the anti-Micron. The problem NVIDIA has is it's up a lot into a big up quarter for tech. And I will tell you, if the if the Qs go down to 300, NVIDIA is going to go down too. Everyone's talking about this as the key AI play, obviously. What's the term the kids use? Ave. But the 20 MA has been key support, and I suppose it will be again. If you're a swing trader, and a lot of you are, you might want to use the 10 MA as a stop. I'm cool with using low of day since it was a nice little hammer at 258.5. This should have been resistance here. It did overshoot a little. I still like booking profits. We're starting to roll over a little in the money flow, actually with a little bit of a lower high kink here, although I don't make that much of it. There is room if it does want to re-accelerate, which it could, but I do like trimming out of some gains here and, trailing up stops, because we did overshoot our key area that we were looking for. So Alibaba. So Jack Ma reemerged after being kind of sequestered, I guess. Being generous with that term. For a while, and they now announced that they're going to, I don't even think he has anything to do with the company anymore, but they're breaking it up into 6 parts. Interesting. We're up into the 50 MA, probably a good area to trim into. There is a gap to fill here at 103. I'll keep it simple. I wouldn't let it get below the 38.2 on you now, which is 95.46. And I would be trimming at 100.39, which is the 50% fib, and I would be trimming more at probably fully out at 105.32. Okay. BIDU, wherever you do, I do, was up in sympathy. Very simple. Don't let it get below 155.48 on you. Anything below there probably is a short. Okay. Anything above could continue, maybe even all the way up here to 171s to 174s. TCEHY, which is, did I spell it wrong? TCEHY. This is Tencent, of course, and this looks pretty good, actually. Could have a little bit more up room. Sort of looks like a inverted head and shoulders with a successful kind of neckline check back. These stocks are very fickle, though. And if it does get back up closer to 53s, you probably want to pull the ripcord. Let's take a look at Apple. Also a victim of lock-in, and also their COO was selling some stock. It held the breakout of 156.29 to 157.38. The 20 MA lines up very nicely with trend. So if that does break, we could pull back to 153.81, and then we'll see. And you know me, I'm most comfortable owning any momentum stock as long as it's above the 20 MA. If it loses that, I think we'll pull back to the 50 MA at 150 very quickly. So if you want to do a $5 wide same week put ratio, I'm cool. Even if it overshot to 147, 148, probably still be making some cake. The 200 MA, by the way, has been very, very key support. So we'll see. As of now, this risks a look above and fail. So don't be that guy. I still like booking profits up here, by the way, into any strength. Microsoft, Mr. Softy, back up into some resistance here. Oop, a little bit below my key level here. Yep. Bounced though quite a bit, which was not so great if you're short. 276.76. Anything below you can stay short. Anything above, don't stay short. The 20 MA would be the big downside target at 263.92, which was also a key breakout area over the 12.13 high. So if you want to do some kind of a put spread, or a if you're long and you want to hedge it, you could either use 263 as your down strike. I don't know, how much room you want to give it, but you could always buy 264, sell 250. That looks pretty good to me. I like that. Nice little $15 wide call spread, or put spread, sorry. Tesla. Elon Musk in the house. This to me looks like it's kind of this guy Peter I used to be friendly with, who hates my guts now because I'm a Trump supporter. He runs another broadcast you might know about. He would call this bubbling under, meaning bubbling under, or building pressure below a downtrend line, but not giving much back. As long as this holds like the 20 and 50 MA, I'm cool being long. If it gives back more than that, maybe not. What I'd love to see with this, and I think a lot of people wouldn't expect this, would be some kind of a gap and go, and then you could get up to 206s and 213s and then sell the 200 MA if you could get all the way up there. But this looks like it's setting up as long as the market stays okay. Maybe there needs some news. Meta. So now it doesn't look like TikTok is going to get sold. The Chinese government is kind of anti it, and they, oddly enough, TikTok hired former Biden staffers who have a PR lobbying firm. So you really think 10% for the big guy is going to sign a bill when his crew is getting paid? I'm sort of don't think so. Very simple, though. As long as this holds 197.16, it's okay. If it does not, I think you could probably buy it on a pullback closer to the 183.85 level on some kind of a market decline. I really don't think TikTok was baked into this that much. I think it was just sort of a relief after the last earnings. I do think it needs another good quarter to fill in this gap from 289 to 323, but it is possible. It's very possible that does occur. Just make sure you have the right size and grid trade location, and maybe do some kind of a call spread, because there's not a ton of premium in meta options. So also, if you want to buy some kind of a put spread to hedge yourself out, or just outright buy puts, maybe like 200 puts. Let me take a look. Meta. Let's say we went out 52. Yeah, I mean, for $13. So look at this. I mean, let's say you gave yourself a wide berth and you sold 165s. I mean, that doesn't fully cover the gap, but it does get you down basically near the prior range low. So if you bought 200 and you sold 165, you're basically paying $10 for protection down to 165, basically up at the highs. And if you want to, if you're comfortable, I don't know how many of you are, but if you're comfortable giving away a little bit of upside, $50 more of upside, and you could put this, I don't know, for $2, it's not enough for me, but maybe $40 worth of upside, and you get for $3, and you could bring that down to $7 protection. So you'd have $7 protection to, it cost you $7. You're protected down to 165, and you're still caking all the way up to, what did I say, 240, which is basically where the start of the gap is. Yeah, I actually don't mind that. If you want to do something like that, because I do think that start of the gap area could be some resistance in and to itself, by the way. Google, the googliness. We got into resistance. We talked about booking some profits here. It's pulling back. It's key. It's got to hold this 200 MA. If not, we could pull back to the 50 MA, which would be the backside of the old uptrend, which would be like 97s to 96s. That area could be a buy the dip zone if it stays okay. In general, I still think you could buy pullbacks in Google. I think ultimately, when all said and done, in a couple years from now, or maybe by the end of the year, depending on how things play out, that could get back up to 124s, 125s. Amazon, I still have my put ratio on, so I would love this to go lower, but it's not really. It's kind of just chilling here with a bunch of hammers. I still worry about AWS customers and all the Silicon Valley bank blowups, but it seems like it's in a range, right? 101s down to roughly 91, so a $10 range. So if it gets down there below 90, I'd, maybe sell some puts or take a little nibble. Lululemon, another retailer. So check this out. All right, so we're below the channel low. The yellow channel high comes in here at 369s. Let's see if we did it on the open. 369s. Look where we are. We're around 361s, 362s. So probably a good area to trim some profits into. It's also near the gap fill. So somewhere between there and this close. Keep in mind, anyone who's long weekly premium is going to probably sell it out at the open. So there could be some resistance. Use the opening like 5-minute low as a stop. I'm just gaming this out with you because it's not my first time at the rodeo with gaps into resistance. So somewhere between 368.67 and 374.51, I'd be a seller, and maybe you could even try a short and see if it pulls back. Ultimately, maybe this does get up to channel high, closer to 396s and 400. Probably not tomorrow though. Yeah, so I'd be trimming out. Even 370. This like whole area I like trimming into. This $2 to this like $6 zone right up in here. I like trimming this area here. All right. So let's get rid of the circle. And if you followed me for a while, any excuse to turn a circle into a rectangle, I will take it. So this zone, seller. At least I am. What's up with Phillips Van Heusen? This was up a lot too on numbers. This looks almost like a professional gap, to be quite honest with you. What is the pro gap? It's the one that no one's expecting, that ignites the big up move and lets nobody in. Look, this is a gap and go over the 50 MA. What a boss that was. Problem is we're very close to some resistance here in the old 61.8 up here at 94.12. So probably an area to trim into. I think you could buy the dip around 84.46, but if you do buy it there, which is the 50% fib, the low of day of 82.40 is a must hold. I'm actually going to put an alert here. And I don't even mind if you want to give it like the 3-day rule just to see if it consolidates, because how many times have we seen these pops give it right back, right? So if you want to be right or right out, you could try it there with a tight stop, but let's see if it holds. But this does, to me, have the imprimatur of the pro gap. We'll see. We need, obviously, for it to confirm, but it does have that look and feel. Netflix. All right, so this was going down on the news that they were lowering prices. There was some user data info. It was up into the 50 MA. We talked about 332.72 being an area to trim into. So very simple. If you want to be short, today's high of day of 333.32 is a great stop. Anything above there, I think, is a long and could continue up to channel high at 353s. If it does rally too hard into the numbers, I'd be a little worried. But yeah, 50 MA. Below it, no bueno for longs. Above it, muy bueno. Disney, they fired 9,000 people, I'm sure, because they're having a great quarter. Iger is back at it, boy. So I think people are actually going to be traveling quite a bit to Disney. I've been seeing a lot of my friends who have families. They chose a different lifestyle than me. That's a whole other conversation, though. And they're all a lot of them are in Disney World with their kids. So, yeah, that's it. And I think that the stock probably will be okay for numbers if it's not up too much into them. And I'm just kind of watching this list lower. The 20 MA has been resistance, and you have a nice little 2-day setup here. I'll tell you what, if you get above 96.01, this could be a row long as a play. And maybe it gets itself back up to 101s. But I have the 90, I think I still have the 90.85. Let's take a look. Let's take a quick look. I don't want to give you guys a piece of information and it turn out to be not true. I wouldn't be able to live with myself. Yep, 90.85 in May options. So, yeah, if we got back down to 90, I'd probably take the gain. I have to take a look if there is gain. But obviously, if this got down to 84.85 again, I'd be, drinks are on me. Yeah, over 20 MA, I think long, below, just chop. But I still think Disney is doing all right. I'm telling you, I'm seeing those photos. Nike, very close to that 100 MA support here. I really hope it doesn't do something stupid like rally early. But channel low and like this 114-ish area maybe. Let me re-render this a little here. This area, though, could be some support here for the Nikester. We're already kind of bouncing off the 100 MA, so if you're, if it starts taking off, you could just use the 100 MA stop. But down in here, I think there could be a bounce to be had. They reported, though, right? It was up and down, which is typical Nike fashion. Although this one was down into the number and then it was up. So the 100 MA, this is where it held the last time. So if you want to be long Nike, 100 MA looks like the spot. How are we doing on time? Let's try and fly through these. CrowdStrike. Below 130, I don't think you need to be long, but it did hold the 20 MA. So I have an alert over the high of day at 131.65. If it clears, do it. Try it long, in my opinion, with, of course, a 130 stop. CRM, back into the mix here. I like trimming profits, and if you want to use a stop, below 190.34 is that stop. Is that stop. PANW, Palo Alto. This is starting to look a little funny to me because, look, it made some new highs here, and the money flow didn't confirm. I think you got to get out of this thing. At least some. And do not let this get below the 20 MA on you. 188.93. Okay? I'm starting to sour a little on this, and I think the TV guys are loving it. So that's also cause for concern. Slavis now. It better hold now because this is the very key breakout area. And the 100 MA would be the next spot. So if it loses the low of day of 427.01, I think you got a quick short down to 418.44, and then we'll see. But I think it needs to be over 432.17, which was this breakout. So 430.24 to 432.17, that needs to clear again for it to go higher. It just looks iffy to me here. I don't really have that much of an opinion on it. Booking. The stock is just... We talked about the 50 MA. It's back up. Just don't let it get below the 20 MA on you now. 2.2188. But still looks pretty bossy, saucy up here. I'm surprised it hasn't made new highs, actually. My thesis was this was going to make a new high, have a look above and fail, and then come back down. So far, no bueno, but it has done everything right. It held the 23.93.31 key area. 50 MA now is holding. I mean, until this breaks the 50 MA, you're going to probably have a tough short here. AXON. How about AX off, for that matter? Here's your problem for me with AXON. The money flow is just bleeding the F out of this thing. So, yeah, I would get out of it. The 50 MA is roughly in line with trend. You might want to try a reload there. It's kind of near a gap fill. But starting to make some lower highs and the money flow bleeding out. It could have been back up. It's possible, but... For me, when I see this, you're lucky it hasn't come down yet. Have a great rest of your week. I'll see you for the weekend video, late night Friday, early morning Saturday. And we did this video in under an hour. Boss. Cheers.